But moving on, JM Financial, the company has reported its quarterly results as well. The profits have seen a growth of around 16%. Now, before we speak to Nishit Shah, who's the Group CFO at JM Financial, the stock is down 3%. Vansh joins us with the key talking points. Vansh, what is it that we should focus on the JM Financial?
Well, Hiral, as you rightly mentioned, the profit is up by 16% on a YY basis. However, it's down by 40% on a sequential basis. So, slightly muted set of numbers is what we are looking at for a JM Financials. Also, if we look at the AUMs for the company, in terms of wealth management, we have seen an uptick of about 2% on the AUM. In the fund, in the non-liquid AUM for the mutual fund segment, we have seen an uptick of about 1%. And in the affordable home loan segment, we have seen an uptick of about 4% on the AUM front sequentially as well. Also, if you look at the financials, the net profit is down by 40%, and the total income is down by 7% on a sequential basis as well. If you look at the segmental revenue, we saw strong growth coming in from the corporate advisory segment. The revenue is up by 49% sequentially. We saw a strong downtick in the treasury segment from the company. We saw a downtick of 39% in terms of revenue as well. So clearly, slightly muted set of numbers is what we have been looking at for JM Financial as well.
Okay, thanks Vansh. Nishit Shah, Group CFO of JM Financial Johnson right now to talk about the numbers and the outlook ahead. Nishit, good having you. Thank you so much for taking the time out. This is Neeraj here. Good morning. And Nishit, put this into perspective. We seeing, I mean, when I just look at the broader capital market space, right? Companies engaged in a meaningful way in investment banking are showing a good quarter. Everybody else seems to have had a hiccup or two. I'm calling yours a hiccup because I believe that's what it is. It's not a trend. But put this into perspective for us.
Yeah, so basically, if you look at our numbers on a year-on-year basis, we've reported a 16% growth in profitability on a year-on-year basis. If you look at the wealth recurring AUM on a year-on-year basis, the growth is almost 26%. On a AUM basis for the non-liquid mutual fund, the AUM growth is almost 36%. And as far as the affordable home loans business is concerned, the AUM growth is almost 28%. So there is a decent set of numbers. As you know, we are investing heavily in wealth asset management as well as in the affordable home loans piece. As you correctly pointed out, the capital markets business has been doing extremely well. In fact, our sort of pipeline with respect to filed documents for IPO is almost 1,20,000 crores, which is significantly up from last quarter. So there is a fair bit of visibility. A lot of investments are going into the wealth and asset management businesses, and we are seeing a significant traction. And as and when the productivity improves, it's going to be beneficial for us from a numbers perspective.
Do you okay, fair point, Nishit. Do you sense on a console basis, not an individual segmental basis, but a console basis, a much better second half than what the first half has been?
Typically, that has been the case. Also, I would like to highlight that we have had a transition over the last 1 year. Earlier, our loan books used to be in the range of almost 15,000 crores. So if you look at it on a year-on-year basis, our loan book has come off, and that is consciously done largely to move from a on-balance sheet approach to a syndication approach as far as our private credit businesses are concerned. So there has been a transition, but typically you are right. The second half is better than the first half.
Okay. Nishit, good morning. Hiral this side. We're talking about the second half from here on. When it comes to corporate advisory and capital markets with regards to the IPO transactions, from what I know, 56 filed IPO transactions is what we are watching out for, 1.2 lakh crores. What is the estimated conversion rate and timeline that you're seeing when it comes to the next 12 to 18 months on this aspect? Because that will probably tell us what numbers could look like in the second half.
I think if the markets continue and the window is available, we should be able to put through a lot of it. Also, what we are not counting here is the M&A pipeline as well as the private equity pipeline. As you know, we are like a full service investment bank, and typically those aspects of the business also tend to do well in the second half of the financial year. So it's pretty exciting.
Any number that you could give us from the 56? What is your target over the next 12 to 18 months?
I think we should be able to put all of it through
Okay.
if markets continue to be the way they are. So
And
if you look at it last quarter itself, right, for the September quarter, we pushed through almost 28,000 crore worth of capital market transactions. And a lot of it has translated into the revenue growth that you are seeing. So
And
yeah, should
Nishit, when you mention about M&A and corporate advisory as well, particularly when it comes to cross-border deals, what is that looking like for the second half of FY26?
cross-border is looking good, as well as a lot of domestic interest is also there. So we are in the midst of closing quite a few of them. So let's see.
Okay. Nishit, sorry, but I just bring the focus back to numbers a bit, and I'm just trying to understand. And correct me if I'm wrong here on my numbers, but when I look at the numbers from, let's say, the September 2022 quarter, right? You've done well in a lot of areas, but the numbers are circa on the top line about 1,000 crores. The numbers are circa 650, between 600 and 750, 800 crores on the operating profit front, right? Is there a breakout step up year that you can envisage for the company in the next 2 or 3 years where you break out of this range?
Yes, we should be able to do that. As I said, there are two things. One is with respect to a reduction in the loan book, and that has resulted in your top line interest income component going down a bit. So that is one part. And second part is a lot of investments are going into our wealth management, asset management, and affordable housing businesses. So as and when they kind of turn around, there will be a breakout is what we can estimate.
And any sense of when does that happen? I mean, does it happen maybe in FY27, maybe FY28, or difficult to predict?
I think it should happen between 27 and 28. 28, you will see a full year, and 27, second half, you will see the numbers panning out.
Okay. Hiral, any more?
One question I have is on your return on equity. I mean, the medium to long-term target, when are you expecting a turnaround on that front? Because that is still something which is concerning when it comes to investors, and in terms of your ROCE as well, and any target trajectory that we can look at?
Yeah, so for the first half of this financial year, we are tracking an ROE of 14.5% on an annualized basis. Over the what we've also sort of said in our commentary is that we'll step up the dividend payout ratio. So if you would have seen our results, we've announced interim dividend after almost 2 years of 1.5 rupees per share. So that should boost the ROE as well. I think in the longer term, the target is obviously in the low to high teens to reach that level of ROE. But we are in an investment phase, especially in the wealth, asset management, and affordable housing businesses. So it is to be looked at it in that context. If I were to break up the ROE, corporate advisory and capital markets is almost more than a 40% ROE business. Wealth management, as I said, investments are happening, but still we've clocked about 14% ROE over there, and that should also increase. On the asset management side, we should break even in FY28, so you would see the ROE is pushing up there
On
as
that
well.
front as well.
Yeah, and on
Okay.
the affordable housing finance, we should be able to hit a ROA of between 2.5 to 3% on a sustainable basis, and that will drive the ROEs there as well. So if you look at individual component businesses, there is a roadmap for delivering strong ROE, and at the corporate level, dividend payouts have been
Got
increasing,
it.
so it will also support the
So
ROE.
FY28, 29 is something that the street should be watching out for, Nishit.
I
Thank you.
think 27, 28, and a lot of investments are actually going in.
Got
So
it. Thank you so much, Nishit, for speaking to us at NDTV Profit. Always a pleasure to have you on the show as well. But moving on.